Welcome back to Wall Street Silver. I have a great little roundtable here today. Mr. David Morgan of the Morgan Report and Mr. John Miniotis from AbraSilver. Thank you for joining me, guys.
Thanks for having us.
So, talking about long-term charts, this is the dollar chart, and it made a strong double bottom here. And my question for the panel is, could we still see silver and gold appreciating in terms of price, even in a scenario where we're having a strengthening dollar?
Yes, can. It doesn't happen often, but the most inverse correlation is the stock market, which is supposed to reflect the economy, and we all know that's a joke now. But silver and gold are more sensitive to physical economic conditions than they are currency fluctuations.
Yeah, and then that DXY chart you showed, I mean, of course, that's comparing fiat to other fiat, right? So you're comparing the US dollar compared to euros, but, and so the US dollar could be rising relative to euros, but really they could both be falling relative to the price of real assets, relative to the price of gold, relative to the price of silver, relative to the price of real estate globally. I mean, all of that seems to be rising relative to all fiats. And so, and silver is rising in all currencies is, what the outlook calls for, really. So, I see no issue. I mean, the strengthening US dollar in the short term could have mild sort of headwinds for silver, but, long term, we've seen silver appreciate relative to all currencies.
That's a very good point, John. I think DXY, people focus on it too much. DXY is essentially just a euro dollar versus US dollar. And if they're both, I mean, something like 58% of DXY is the US dollar versus euros.
Yeah, exactly.
And if they're both printing out the wazoo, they're both devaluing. So does it really mean anything relative to gold and silver if they're both imploding their own? I mean, I don't know. That's a bigger topic than this video. So I wanted to get everyone together. Everyone's really ticked off at the market right now. I can just sense it on Reddit. I can sense it on Twitter. Everyone's upset that silver's, down in the 25 range and not banging on 28 or 30. We just had sort of another pullback here. It's right at support, maybe even breaking down through support. And the big question on everyone's mind right now is this buy the dip, or is this the time to be cautious and keep your powder dry in case we fall even lower? And I wanted to get some guys together to talk about this today. Mr. Morgan, what's your thought?
I'll do both. I think we're low enough to go ahead and add or average down. I wouldn't use all my dry powder here. I mean, we could see a spike low to 22. I'm not really forecasting that, but I do technical work. I'm fairly good at it, and it suggests that, especially if the paper pushers have their way. We got a print at that level, they would cover like crazy because the commitment of traders is still not that favorable to the longs. So that's an idea. Also over time, and last comment, Jim, is there's a very strong seasonality in gold. And of course, silver and gold are 85% correlated. August is almost always, not always, it's probability, the best month to buy gold. So we're near the end of July, we're moving into August. We hear the same thing from Frank Holmes. And so I would plan to go ahead and buy some here and anticipate it could go lower and be ready to purchase more.
So you know what they say, sell in May and go away, or what's the phrase?
Go away and come back after Labor Day, which means September. So it's August, the end of August, early September, you're back in. And that actually holds true more often than not.
And that's true for both, the underlying commodity and the actual mining stocks also, would you say?
Yes, I would. And just a brief comment on the miners, and I know we've got John should talk more about it, but look, I really have been a proponent of physical from day one. I'm not going to change my stripes, but if you really want leverage in the market, the best way to get it is through well-chosen mining companies. You need to diversify within the sector. You don't have to over-diversify, but I've made a lot more money buying a stock that went from 250 to 25, which is a 10-bagger, and I've only had those kind of moves in the silver market a couple times. So there's a good way to get, catch people that bought silver at $5 and wish I coulda, shoulda, woulda. Well, if you just study the market well enough, you can actually accomplish those type of ambitions in the mining shares if you know what you're doing.
Mr. John Miniotis, what's your thought? You've obviously been dealing with shareholders also that are a bit, you know, let's just call it depressed a little bit that the miners aren't performing where we think. What's your take on all this?
Yeah, so I agree with Dave's comments for sure. I mean, there's no question. I think overall the sentiment right now from investors is quite negative. But I think if you take a step back, I mean, we all know this is a very highly cyclical industry. So naturally, there's a lot of volatility both on the upside and the downside when you're investing in silver. And like Dave mentioned, particularly when you're investing in junior exploration companies, as our investors know, I mean, share prices can go up well over 1,000%. When you have a rising silver price environment, you have positive news flow coming out, you're adding value. But then on the flip side, as we've seen now recently, I mean, share prices can pull back from your peak levels. We're down about 50% on no news. I mean, before finding a support. And so, you know, it could be painful in the near term for sure. But I think what's important, especially when you're looking at investing more in juniors or minors, is that investors look at the underlying fundamentals, not just the share price levels, right? So it's, you know, the fundamentals for silver for sure have not changed at all. I mean, in fact, if anything, they've improved over the last few months. We all know inflation's continuing to rise, yields are falling, demand for physical remains, you know, extremely strong. But, you know, investors are ignoring that and just mostly focusing on the fact that silver price peaked at $28, now we're about 25, which is really not a major, you know.
That's it's like, why are we freaking out over $3? That's my point. I mean, a year, what was it before the virus? What was it, 14, 15? We're up $10, guys.
Look at the 5-year chart. Yeah, no, exactly. 5 years ago, we'd be, you know, so thankful silver's at 25. But yeah, you almost hit 30, and so now you're
expectations are raised. We all want to be at 32 right now. Lee, what are you thinking right now, Lee?
You know, I scratch my head every time I go into the forum or I read comments on our videos complaining about the price of silver. I'm just going to put up a chart here. Can you guys see this?
Yes.
Yeah.
Okay. So this is the weekly chart of silver. To me, it looks like a bull flag, not a bear flag. But we're making higher and higher lows here. I mean, I was a little cautious on the market last time we did one of these videos. You know, and just seeing the reaction in the forums, I'm like, this is a buying sign to me to see everyone freaking out over the price.
You know something, Patrick Karam, the guy Bad Charts, North Star Bad Charts, he's the charting expert. He showed me that same, don't look at the daily chart. That's what he said. Look at either the weekly or the monthly charts and just remove all the static, remove the noise, look at the long-term picture. And that chart you just showed, you know, we're right at support. You know, depending on how you look at it, we might be right there. And I don't know, maybe I'm just talking my book because I'm incredibly long silver, both physical and the miners, like most of our audiences. And you know, let's face it, none of us here are objective about this. I know Mr. Morgan's the professional and has to be the most objective for his the Morgan report. But we're all wanting it to get through 30, and I think it's just a matter of time. The fundamentals are there. The Fed is printed. You know, what did Congress just pass? Another 3.5 trillion.
Let's spend $1 trillion a month and see where it takes us.
I mean, the Fed is technically at 120 billion a month. That's their stated goal, but lately it's been well north of 100 billion a week.
Jim, at what point does that become a total joke? I mean, I think we're way past that point.
It's a confidence game. It's a confidence game, Lee. And I don't know when is the confidence game up? I mean, Mr. Morgan, you've got about 20 years on me. When's the confidence game up? You've been through this.
Yeah, I wish I knew. It is a psychological event, not a monetary event. We definitely printed enough money to go into a highly inflationary mode or even touch into hyperinflation. So it's not a question of printing. That's part of it, of course. But it's psychology. It's when the people at large say, I don't trust this currency. I want to buy more food because every time I go shopping at the grocery store, it costs me more. Or every time I go to the gas station, it costs more to fill up. This paper is losing its value. I need to do something about it. So once that psychology takes hold, it usually cannot be turned back off, regardless of what the economic metrics show. And I'd like to go back to what John said earlier, and all commented on, complaining about $25 silver. When silver hit 26 and bounced off it twice, the third time from going above it to below it, I put out a huge warning to my premium members that said, I'm sorry to say it, but if we breach 26, and we will, look out. So it's really taken 8 years to get to where we are now. So if you look at that 8-year, you look at a 20-year chart or a 10-year chart, you're not really going to complain at 25. Is silver undervalued at 25? You bet it is. But relatively speaking, well, it wasn't that long ago, we were at 18 and thought we'd never get above there. And then we got $10 above there and consolidated around 28 for a very long time. And I'll just go a couple more minutes. Really, it looks to me as if the paper pushers really have to defend that $28 level for whatever reason.
Mhm.
I can't read their minds. And they've tried to sell off once, covered their shorts somewhat. We're seeing it again. They may be able to slam it down in the aftermarket when there's light volumes and take it down to below 25. I'm not going to predict that. I'm not going to rule it out. But I think once they cover this time, they may say, okay, we might have overdone it. Cover ratio is very low, what it usually is. If you go on just the registered category, it's like approximately 3 to 1. I mean, that's very low relative to paper to physical silver in the registered category basis, what's held in the exchange. Normally it's much, much higher than that. So somebody somewhere is saying, we can play this game, but we better not lever up or gear up too much, because there's people out there, hey, Wall Street Silver, that knows what's going on, and we better be careful. That's my take.
That's just it. They keep slamming it down, and half of the people on Wall Street Silver are sort of ticked off about it, but the other half are like, hey, it's on sale. It's time to buy. They're like, oh, I was waiting for this. Now I'm going to really load up. I mean, so, it's one of those things where some people are just going to, some people like me would buy no matter what. But, every paycheck, every time I got more money, I put a little bit more in, just because I'm dollar cost averaging, and that's my strategy. But, silver's a funny game, and the fundamentals are there. You just got to keep believing that the reasons we got into this originally still hold true. And I look at that chart, and as Lee just said, higher lows. We keep seeing higher lows in this bull flag, and now's the time. I think it's going to bounce, but
yeah,
we'll see. Mr. John Miniotis.
Yeah, no, and I think that chart, when you put things in perspective, I mean, on a year-to-date basis, silver price is pretty much flat. I mean, so it's really not that bad. But what we've seen, I mean, for sure, people had higher expectations, myself included. So there's a lot of disappointment out there. But to me, I mean, what we're seeing in the junior exploration side is, last week was outright panic selling. And it's just not justified by anything that we're seeing on the fundamental side or based on the actual silver price. I mean, there's, ourselves, a number of our peers were down, maybe 15% in a day last week on, absolutely nothing has changed for the company. I mean, especially, if you're a silver exploration company, the near term day-to-day change in the silver price actually makes exactly zero difference to us.
Yeah,
we're not producing. It's not like we're getting less revenue in. We're drilling the same as we were yesterday. So if silver's at 26 today or 25.50, I mean, it really doesn't matter. We'll be producing 3 years from now. So it's a long-term outlook for silver, and that's just as strong as it's ever been in my mind.
Yeah, exactly. You guys gain value by the drill results. I just want to point something out. This is the same chart Lee was just showing. If you take out this sort of virus
dropout bottom, it really counts, but it doesn't count. Sorry to interrupt, but it really, those are anomalies, and you got to think that way. That was a one-off dropout bottom, and ignore it.
Yeah, ignore the virus scare right here.
Yeah.
It just took it out because everything was shutting down, sell to fear. If you ignore this little period of time, the rally started back in May of 2019, right? And this trend is still in effect going back over, 2 years and several months now. And we're right there at the bottom of the trend line. We'll see if it holds. Fundamentally, I think it holds. They're spending more and more. But hey, that's my call. I'm going to stick to it. And if I'm wrong, I'm going to delete this video off of YouTube. So everyone will forget it and never know what I predicted. All right. Last words, Mr. Morgan.
Silver has been money for longer periods and more transaction throughout history than gold. And the biggest conundrum, let's say, for us advocates that know silver is money, yes, it's an industrial commodity, is why we've been put off to the side. Meaning, if the central banks treated the silver market like they treat the gold market and use it as a monetary reserve, the price would probably be above gold. And why is that? Because there's less investable silver available in that form than there is gold. So it's actually less of it an investment form for the banking community. So let's just pretend it's not money and make sure none of the people wise up to the fact that it is, and everything will be all right. The problem is when enough people wake up to the fact that it is, in fact, in some ways, it's a better money than gold. Look out.
Thank you very much, gentlemen, for your time and your commentary on what's going on in the market. I really appreciate it. I know our audience really appreciates it, and we'll do it again sometime.
Sounds great. Thanks very much.
Take care, everyone.
Thank you.